Joining us now is Sonders. She's the chief investment strategist at Charles Schwab. Lizanne, could you also kind of nod to the market weakness that is once again upon us and kind of explain how you think the Fed factors into that?
So I can't just nod and not answer.
Might be the only answer to give, yeah.
Yeah, I mean, obviously we had a couple of days of reprieve, and you did see that reversal back into the higher vol names, into the growth trio of tech, communication services, consumer discretionary, but just as quickly you see those at the bottom of the leaderboard. So it does tell you that there is at least some money, maybe more on the institutional side of things that are algo-based or quant-based, that look for some of those short-term oversold buying opportunities. And given that as of Thursday you went into correction mode, that might have been one of those triggers. But I think the skittishness comes back fairly quickly as we continue to digest all that news. It seems to me that the trend is still on the margin to the downside.
You do think that we're heading to the downside. Again, like, do we even ask about Fed policy in the midst of all this? A couple of different ways I've heard of interpreting it are the uncertainty, potential upward inflation pressure keeps them on the sidelines. Maybe otherwise they would be, talking about more of a cut in the near term. Do you think their language tomorrow is going to be tilted towards kind of like the hawkish hold or dovish hold side? And from the chair himself, what should we expect?
I think they're going to try to be as neutral as they possibly can. And I'm not sure, were it not for the tariff-related uncertainty, that the Fed would be biased toward cutting. They obviously decide to move from having cut 3 times, the first of which was 50 basis points, to pause mode in advance of all this rapid-fire tariff-related news. So I think the default switch was already set to pause. You add this uncertainty into the mix, and I think they stay in that mode right now. The tricky part will be let's call it the competition between the two sides of their mandate. Obviously, worst case scenario would indeed be a stagflationary type near-term outlook where you get some upside in inflation, downside in growth, particularly if it was manifested in upside to the unemployment rate. Then that puts the Fed in a bit of a pickle. But I think it's a pretty easy call that they'll be in pause mode. But there will, Powell will certainly be forced to address this as head-on as he can, at least in the press conference. Whether he can maintain that air of neutrality is yet to be seen.
Steve, what are the buzzwords that you think our ears should be pricked for? It's, moments like these, it often feels like they kind of use these euphemisms. What would you be listening for?
Well, I'm going to give away tomorrow's story because Lizanne Sonders, I think, is right on. And what I was going to lead tomorrow with at the 1 o'clock show, Kelly, why not do it today if you can think of it today?
Let's do it.
Is the Fed comes out of the closet with its tariff forecast. And this, I think, is the key. The Fed's been trying not to essentially tell us what it thinks about the impact of tariffs and administration policies on inflation and growth. Well, guess what? They have to write down numbers in that summer of economic projections.
Right.
I can talk more tomorrow about where people think it's going, but they're going to have to show their cards tomorrow. And then the question becomes, in the face of exactly what Lizanne was talking about, weaker growth and a higher inflation outlook, what happens to the 2 rate cuts that are built in this year? There's a debate about what Lizanne was talking about, which was this. Where is the Fed's bias here? Is the Fed's bias towards a pause, or in that they had previously said they're restrictive, is their bias to actually cut, all things being equal, which of course they're not?
Right. Go ahead, Lizanne.
Yeah, no, the all things equal. That's we should have that as a qualifier to everything we say these days.
Right.
And Steve makes an important point, especially talking about the potential upside for inflation. I think it'll be interesting if they're more direct about it. But I think it's important to differentiate between a consistent higher inflation rate and a level setup. And I'm not an apologist in saying, don't worry, it's just a one-time jump in prices. I mention it because we all live in the weeds of core versus headline and PCE versus CPI and core services ex housing and month over month and year over year. But the real world lives in prices compared to sometime in the past. So the fact that the consumer thinks about inflation in those level terms, not rate of change terms, is why it's important, regardless of what it means long term for the rate of inflation.